Good morning, traders. Today is the 8th of October. My name is Neville Hornsey, market analyst with YouTrading. And today I'll be taking a look at the Canadian dollar versus the Japanese yen. So first thing we do is look at the YouTrading.com Forex heat map. And you can see here that the Japanese yen is the weakest currency at the moment. It's red across the board. That means there are flows out of the safe havens of the yen. Also, if you look to the Swiss franc, that's mixed. So it's not exactly a total risk on, risk off day. There's also a mixed US dollar, and we've talked about that because we've got the non-farm payrolls coming up later on this afternoon. The euro looks like it's the strongest at the moment. And if you look down here, the commodity pairs, Australian dollar, Canadian dollar, and New Zealand dollar, they're fairly mixed as well. But by the looks of it, the Canadian dollar is the strongest, which is why I've picked the strongest risk on versus the weakest risk off. Looking at a calendar, we had Japanese household spending out this morning. That was down and below expectations. So one of the reasons why the yen is particularly weak today. We also had a current account data and another sort of poll from Japan's economy. Later on today, at the same time as we get NFP, we also get the Canadian employment data. So we get Canadian employment change, and they're expecting a decrease from the previous reading. You can see here the expectations are for 65,000 new jobs, and yeah, that's down from 90.2. And then if you look at the unemployment rate, they are actually looking for the unemployment rate to drop. So, you know, those two metrics there are probably going to be the market moving elements for the Canadian dollar. If we go to a Cad Yen chart on the active trader platform, I've marked up a couple of lines. So looking for sort of support and resistance, generally I use the closes, and at the moment I'm on the weekly chart. So the line chart, you know, is the closes. So we had resistance up here. You see the price did a ABC up, but then it found a double top. So you can put another arrow there. So that sort of confirmed resistance. And if you look left, it had been previous support as well. So this line here around the 91.18 is has been support and is currently resistance. And then again, if you look to this arrow here, we've got the around the June FOMC date, we had another push up and found resistance again. Another level to look at is this green one. So I'll just pull this down a little bit. So here I've got a move through. So it kind of like coils through this line, came down, found resistance, went back up, tested resistance, price moved down, tested these lows here into this demand area here. But on the next time, big impulsive move higher. So we've got oil rising at this time. Canadian dollar pushes through this area of sort of pivot really. And we didn't really do anything there, carried on through, but found resistance again. If I just pan out a little bit, got this dashed line here. Just going to make it yellow so you can see it and make it a bit thicker. Swing high from 2007, swing high from 2014, so 7-year gap, and then another 7 years, and we get to 2021. So we've got this descending trend line, and at the moment, prices are moving towards that, and this resistance line at 91.18. Okay, so we're looking for Canadian dollar versus the yen. If I go to the sentiment indicator, type in CADJPY up here, we can see that 86% of traders on this platform are short the Canadian dollar versus the yen. So that's another good reason to be looking for a long. All right, so this is the weekly chart. We go down to the daily chart. Here, just want to mark out that we found a bit of resistance, pulled back, broke through, confirmed a support on the way back down. So you put like a little arrow there. This is why I've drawn this line here, because obviously this line over the course of the last 6 months, there's been resistance, been support, been resistance, and now I'm looking to see if it will act as support again. So we'll come back down, test that hopefully, and then carry on up here. Here, got like, if I go to the candlestick chart now, make it a little bit clearer. If we were to just sort of power through on a good Canadian data today, then we would come up to this little pivot area. So we've got, I'll just get the box and I'll make it yellow again so we can sort of see it better. So this is our box. So you can see here that at this balance area, prices came down, then we had this big move down, come back up, tested that old support, became resistance. So now we're looking to see if we can get this Canadian data to push the Canadian dollar all the way up to 90.275. It may pull back, like I said, before doing so. It just may run up quickly. And if it does run up, then we're not going to take a trade until the market confirms that we've got support again. So for that, we need to see a break higher and then a pullback and then a long here. So I'll take a trade down here at 88.25. If we come back down and we get like a sort of a test and like a wick and then a push higher. So that'd be the 88.25. If we just power through, nothing I can do about it until we get above this level of resistance and we wait for it to act as support. So that's basically what I'm looking for. If you then go to, say, an hourly chart, when you do find prices come back down to previous support or resistance, you can use a stochastic indicator to confirm this. And at the moment, I've got mine set to 10.35, but you could smooth that out and have 10.55. Okay, so what am I looking for with a stochastic indicator? It's just a confirmation really of, if I'm thinking this level here between 88 and 88.2 is an area of resistance, I want to see that get broken properly. So, we go higher, we come back down. And then every time we get oversold, I could look to sort of buy. So as long as the price hasn't like run through and come back down somewhere else, like into the middle of a range, if it's still around this resistance, and then I've got a oversold indicator, like this oscillator here on the stochastic, saying, prices have come back down relative to each other, then I can start looking for reasons to get long. So that's another thing you can do. You can wait for a pullback and then wait for a big green candle like this, or a big sort of wicky candle like this to get long. That means you can then put your stop loss, relatively safe under a swing low. So here or here, because obviously if you're expecting a pullback and then old resistance to become support and it fails to act as support in the future, and you get like a lower low, then your idea is wrong and you need to get out of that trade and wait for the next setup. So again, this is just like an if-then type of situation. And it would be if the price comes back down to old resistance, now acting as support. If the oscillator is showing oversold, and then we get a big bullish sort of move higher on a candle, then that's when you can take a long, and that's where you can limit your risk. And as long as you're looking for a risk to reward of 1 to 2, then you can start targeting these highs up here. And then obviously, depending on what actually happens, here we can see that we had a big bullish impulsive move through this high, and then we had a little bit of a consolidation at that high before further push higher. So that's an aggressive breakout. This is a classic retest. And that's how you can trade the CAD versus the yen today. All right, good luck, and I'll speak to you next week.